Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we are tracking at this hour. Markets are set to end the week with gains. The Nifty trades above the 10,750 mark. Metal stocks lead the gains, while pharma stocks are the top laggards. Not all Fortis board members were in favor of the Munjal-Berman family bid, admits the management. The Munjal-Berman family combined says they hope to complete the entire process in next 45 days. Stocks like Bharti Airtel and Idea are seeing sharp cuts after Reliance Jio launches a new postpaid tariff, which is 50% cheaper than all other comparable plans. Idea Cellular now falls for the 8th straight day. And Asian Paints is the top Nifty gainer after a strong fourth quarter. Management says it is encouraged by the performance in the second half of FY18.
Viewers, thanks for tuning in to Countdown. My name is Neeraj, and the market's doing reasonably okay for themselves, 0.5%. Considering what we've seen the last few days, this comes as a positive surprise. We're doing reasonably okay. The Nifty banked to about 0.5% or just about 0.4% higher. And the mid caps and the small caps will come up on your screen, and then the market breadth, the advanced decline ratio will come up on your screen as well. And you will see that there's a bit of a pullback from the lows of the day for the mid caps at least. For the small cap space, not so much. And the market breadth though would probably, still in the negative. I was thinking that maybe sometime that the worms would have converged again, but no such luck. So still in favor of the declines. The heat map. And it will be Bharti Airtel on one side. If Idea was there, then that would have been the case. Sun Pharma, and Darshan was speaking about a launch as well, which could, have an impact. But so Sun Pharma, Cipla, Lupin, and that IT and Pharma pack is looking weak. But Bharti Airtel, the principal loser, down about 7%. We'll also get an Idea Cellular on the screen. But just before that, just look at the gainers as well. Asian Paints right up there, the boy up about 5% Valuations in its favor compared to some of the other consumption names, 41 times. Asian Paints is nothing to complain about. HPCL, BPCL. I don't know if the market is now pricing in that post the election getting over, there will be some bit of leeway with the pricing, if you will. And maybe that's why the stocks are doing what they are doing. And just before we talk about the top mid-cap losers and gainers, just want to get up Idea Cellular on the screen out here. We did this in the morning as well, looking at what happened to Bharti Airtel. One was just shuddering as to what could happen to Idea. And that one has fallen 11%, now nudging the 52 mark, actually below that now, 52 mark. And this is probably the 7th or the 8th day that Idea Cellular has fallen. So telcos are getting badly beaten down. For everybody who thought that all three will now start converging on the pricing thing, pricing issues, and all three will survive. Survive they may, but right now from an investor's perspective, there's a lot of pressure. We'll talk about that a bit later on in the show. We'll get an analyst as well. Very quickly, just 2 or 3 pockets. I just want to highlight the mid caps, not really the small caps. We'll hand it over to Navneet very, very quickly. But just highlight the 2 or 3 pockets of strength and weakness. So firstly, the gainers. And JSPL, Berger, Aditya Birla Fashion results day today, and that one is up about 3% in the session today, so not bad going. I think Berger is taking off due to what Asian has done. And the top mid-cap losers include Indiabulls Ventures, Ajanta Pharma, and Hudco. In fact, Hudco over the last 6 months has been amongst the top 10 losers as well. But Navneet, what about a more liquid universe?
Well, it's looking good so far, Neeraj. The Nifty, Bank Nifty, both the benchmark indices currently are trading around the day's high level. 10,762 for Nifty, 26,234 for Bank Nifty. But I want to pull up the futures and see what's happening with the premium with both these indices. Remember, the premium on Nifty futures has been coming down, but we've seen slight bit of uptick when it comes to the futures premium today, almost 15 to 16 points. 3.5% higher when it comes to the OI edition. The Bank Nifty futures, which had been closing at a discount in the last few sessions, continue to trade at a discount today as well. Yesterday, there was some unwinding seen on the weekly options expiry day. Bank Nifty has seen some bit of addition today, up 7.5%. India VIX finally has cooled off its gain for this 8th straight day, but we've seen some bit of losses coming about in today's session. So that's a bit of a relief, at least for the bulls in the market. 14.1 still remains at elevated levels. Let's tell you which are the option strike which are active in today's trading session. Well, significant put writing has come in for the 10,700 strike. I was just checking the premium there. It's almost about 105 rupees. That's telling you the downside for the put writers is protected till the time index touches those levels of 10,590 on the downside. So watch out for that. The 10,800 call strike, however, seems to be pretty active. That's added nearly 2.3 lakh shares as we speak. Well, in terms of stock futures, Neeraj has highlighted both these stocks, but they are buzzing in today's session. Asian Paints, your top gainer on Nifty. The stock's trading around its all-time high mark. The volumes are higher on the cash side. Looks like cash-paced buying, so watch out for delivery data here. On the futures side, fresh long build-up has been seen 15% higher. Remember, the gross margins went up despite of crude prices inching higher for the quarter. Idea on the other side is the top F&O loser for the day, 11% lower as we speak, hitting 52-week low in today's session. Pull up the futures, 8% higher, telling you there are some fresh traders are betting on the downside when it comes to Idea today. That's seen gains of almost 8% when it comes to OI addition, Neeraj.
Well, so that's the long and short of what's happening in trade. And you've heard about all of these stocks, but because it's Friday, it's that time of the show when we do some deep dive into all these interesting stocks and stories. Yash, Jayesh and Yatin join in to talk about detailed conversation about telecom and talk about what's happening to the paint companies and other factors as well. Let's start off with the paint companies. And Yash, let's start off with you first. What did the management tell you and what are brokerages making of the earnings?
So we spoke up with KBS Anand, the Managing Director and CEO of Asian Paints. Some key takeaways. First of all, the company sees the benefits of GST finally trickling down. They are seeing a greater demand in the industrial paint segment on account of GST. That apart, the pent-up demand over the first half of FY18 and the first 9 months is coming back, and they see greater demand going forward as well. Now, even though the demand conditions are seen improving and the management is cautiously optimistic, they still believe that they would require at least a couple of more quarters to look at how the volume growth picture is likely to be. Also, they are quite bullish on their home improvement business. Both the SS and Sleek, which is the kitchen improvement and bath fitting business, have been doing quite well, and they expect a strong growth momentum to continue in that business as well. They have set an FY19 capex target of 1,000 crore rupees, largely for the expansion of their Mysore and Vizag plant. As far as brokerages are concerned, we have HSBC on Asian Paint. Now, they have maintained the buy rating and have hiked the target price from 1,360 to 1,400 rupees, indicating an upside potential of more than 14.5%. They believe that Asian Paints is a long-term structural beneficiary in the paint industry. A strong double-digit growth in the decorative paint business was ahead of what the street was expecting and should put to rest fears that it is losing market share, as companies like Kansai Nerolac have been consistently posting double-digit volume growth numbers. EBITDA growth of 18% also was quite positive and in line, and they believe that the company is in a position to pass on the higher input cost prices to the consumers. Also, we have Morgan Stanley on Asian Paints. Now, they have also maintained an overweight rating and have set a target price of 1,400 rupees, indicating an upside potential of 15%. They believe that Asian Paints is well placed to benefit from the ongoing acceleration in the discretionary consumption growth. They also expect a strong recovery in the domestic volumes to continue, and also the industrial paint, home improvement and international business continue to do well. Back to you.
All right, so brokerages remaining bullish on Asian Paints after the volume growth surprised the street this time around. Well, thanks for that, Yash. But Jayesh, coming to you, this morning you had told us about a buy signal on IOC, and I can see all the oil marketing companies are up in trade today. Could you give us an update what's happening with IOC?
So Navneet, what happened with IOC was that Bloomberg's proprietary trender indicator that had turned positive as of yesterday's close, and that's the reason we had told you in the morning that there could be a potential buy signal and the stock could likely go up. The other factor that really contributed to this was that the oil marketing companies in the recent past had been beaten down, and IOC is in fact bouncing off from the 52-week low. So, good base formation seen over there. If you can see the chart, the entire month of April, it has actually consolidated near the 160, 160 165 zone, and in fact yesterday's close indicated that the trender had turned positive. Now what you do with this going forward is that once the trender has given you a buy signal, the trender level now becomes your stop loss level. So that currently stands at about 161 with current market price at about 170 or something, and in the morning it had actually opened with handsome gains, but has come off the day's high. But as long as this 161 is maintained, the trend should likely be upwards as per the trender.
Okay, that's about IOC. Let's move on and talk about the telecom space, which is in focus. Reliance Jio is not done yet. The country's youngest telecom operator has gone ahead and cut tariff, this time for postpaid connections, and that's put its competitors in a spot. Bharti Airtel is the top nifty loser today, as other telecom operators are expected to follow suit. Yatin, now the tariff war seems to be spreading into the postpaid space also.
Yeah, clearly, Navneet, and more importantly, one needs to understand that despite, being 6% of the total subscriber base, the postpaid connections contribute nearly 20% of industry revenues. And once, we have a tariff war in that segment, probably that 20% pie is also at risk in terms of the downside which a tariff cut can provide. Now, what various brokerages have been talking about, that after Jio has announced the 199 rupees postpaid plan, we could have an impact of, almost, 1% on the revenues once the overall postpaid plan prices drop by nearly 10%. The impact on consolidated EBITDA could be anywhere between 2 to 3% if the tariffs drop 10%. So that is the kind of impact that we are talking about. That is the sensitivity analysis that Morgan Stanley has done. Jefferies also believes that the Jio's plan to discount, the current ARPU by nearly 50% could impact the overall incumbent revenues. We can see almost a 10% cut in postpaid prices, which will lead to a 2% cut in overall ARPU. For the industry, currently the ARPU stands at close to 400 rupees, and Jio is challenging that particular price point. Deutsche Bank, however, is optimistic. They believe that they don't see any negative impact on the industry because of this tariff. They believe that the overall forecast for revenue fall in FY19 for telecom companies will be to the tune of 9%, which is already factored in. So mixed reviews coming in from brokerages, but clearly stocks like Idea down 10% and Bharti being the top loser on the Nifty, down over 5% in intraday trade.
Well, thanks a lot for that, all of you. Let's get an analyst view on this. Himanshu Shah of HDFC Securities joins us right now on the show. Himanshu, good having you. Thanks so much for joining in.
Sure.
What have you made of this latest salvo from the Jio stable? And as per your calculations, impact on first the mathematical impact, then we get to the sentimental impact as well. The mathematical impact on the EBITDA of the incumbents.
Okay, and two scenarios possible. One, the gap between prepaid and postpaid ARPUs has been significantly higher. So whatever price-sensitive subscribers would have been there, would have already migrated either to prepaid or downgraded themselves on postpaid. This postpaid base would be primarily corporate subscribers or those who don't worry much on tariffs. So thus, until Jio penetrates in this segment, the impact could be limited. Now, having said that, some churn or renegotiation of tariffs by this set of customers can't be completely ruled out. Assuming that 15% of the customers churn to competition, that is Jio, of the incumbents, and another 15% renegotiate their tariffs, say by around 30% or rupees 100 impact on ARPU, then that is 30% of the postpaid subscriber base in total, then this could impact Bharti's EBITDA by almost around 1,200 crore rupees per annum, and that of Vodafone and Idea combined by 1,500 crore rupees per annum, which is around 3.5% of Bharti's consolidated EBITDA and 7% of its India wireless EBITDA, and that of around 11 to 12% for Vodafone and Idea combined EBITDA. On FY20 estimate. And if we see on a per share basis, then the impact would be around 27 rupees for Bharti and 15 rupees for Vodafone and Idea as per our maths.
All right, go ahead, Himanshu.
We have already seen some amount of price correction. We have already seen, including that in today and over last couple of days.
Okay, Himanshu, what you're suggesting is EBITDA impact for the incumbents will be somewhere in the territory of 1,200 to 1,500 crore for Idea Vodafone combined, that is. Do you think the current correction post this news that we've seen for stocks like Bharti Airtel and Idea now seems to be priced in, or we could see more pain in both these counters going ahead?
The competitive intensity from a near-term perspective remains significantly higher in telecom. It is from a near-term perspective, it is very difficult to comment. Some amount of further derating can't be ruled out in the short term. However, that said, telecom industry has already consolidated into 3 private players market. Significant blow has already been absorbed in terms of financial and price points by Bharti, Vodafone and Idea combined. Also, incumbents are expanding their broadband footprint. They have also met Jio on tariffs, albeit with some premium. Jio also continues to burn cash. It also has an aspiration for IPO. Now, if we see in this backdrop, probably a price increase should take place sooner than later. Postpaid was probably the last segment which was untapped by Jio. Now with this today's new plan announcement, Jio has also attacked that. So hopefully all the negative surprises should be behind us. So from a longer term perspective, we believe that both Bharti and Idea makes for an investment case.
Okay. That's what Himanshu is suggesting. Let's see if at these levels there could be new investment case or not. But Himanshu, do you expect any sort of retaliatory measures coming in from the incumbents like Bharti, Idea and Vodafone?
We customized offering wherever they foresee the customers churning out, we may see customized offerings, but we are not forcing a full-blown matching of tariffs with Jio from the incumbents. The incumbents had not reacted even to the 49 rupees plan of Jio on feature phone.
Yeah, and I think even for their own plans, when they had cheaper plans, not too many people have done that. I mean, I myself changed my plan only 4 months ago. Until then, maybe due to ignorance or otherwise, I kind of stuck with my earlier expensive plan. But Himanshu, keeping all of this into perspective, what the impact on Airtel anyway is seen, and I know you mentioned that we've seen continuous price corrections into these stocks already. Maybe they are pricing in as well. But Idea is the bigger worry, right? Not as strong a balance sheet, I would presume, as some of the others, at least the other two. And under continuous pressure for the last few days, weeks, months, I would argue even years. What does one do here?
As I said, if one is having a longer-term investment view, we believe that these tariffs are not sustainable from return ratios perspective, from cash flows perspective, from the kind of investments that all these telecom operators have made. So tariffs, unfortunately, in the history of telecom industry has been bad, where we have always seen tariffs moving one way, that is south. But the mean reversion of this tariff should take place. It's only a matter of time, whether it's 1 year, 2 years.
Himanshu, I heard you there. Himanshu, I heard you there. My question really is that, therefore, will this be a hope trade that at some point of time it will happen without there being a mathematical certainty to that? And two, would you be comfortable telling your clients to ply onto this trade, particularly Idea?
We would recommend at this point of time, post this correction.
Idea over Bharti or Bharti over Idea?
Preference will be for Bharti over Idea.
Bharti over Idea. But for somebody who's holding Idea, Himanshu, let's say, would you recommend that this is now too late to sell, hold on into Idea, because there could be a reversal that could come in?
I would agree with your point. Probably this would be too late to sell. Reversal, it could take some time, especially with the sentiment so negative and the competitive intensity remaining high.
Okay.
Okay, Himanshu.
Okay.
Okay, I think we'll leave it at that note. Appreciate you joining us today and taking us
Thank you.
through your views on the telecom sector. Let's see if there are any sort of retaliatory measures which come about or not from the incumbents. But for the time being, it's not turning out to be a great day at all, Neeraj. Idea is down almost 12.5%, and Bharti Airtel is substantially lower, the top loser on Nifty right now, down nearly 7%. I also want to pull up Rain Industries. The numbers were just flashing on your screen a while back. I think there is some bit of correction that has come in post the numbers. The stocks reacted quite sharply on the downside to its earnings, which is down 7%. If you look at the consolidated numbers, the revenues have come in at 330 versus 253. The profit figure is looking good, but let's see if there are any sort of one-offs which have been reported in the earnings this time around, due to which the stock has reacted that sharply. So for the time being, Rain Industries at 304, down 7% post its March quarter numbers.
Well, on to the other big story, of course. Remember, yesterday all the future group stocks were up and active on the back of the Walmart Flipkart deal. And we decided to speak to one of the first modern retailers in India, Kishore Biyani, the founder of the Future Group. And he says it's not going to be an easy task for Walmart to turn around Flipkart. He says it's going to take a very long time for any online Indian retailer to turn profitable, a luxury that offline players like him can't afford.
I think for an offline player to get into an online model is a very expensive model, because online gets funded out of the equity in some form, out of the valuation they create out of idea. And I think offline is real business, wherein you have to make money and you can't get funded for the losses which you incur. If you look at the Flipkart losses, it's in the tune of, people say it's in the tune of around 8 to 11,000 crores a year. I don't think so any offline company has that kind of wherewithal or funding which can make this kind of losses just to acquire customers which are much lower in numbers, and the cost of doing business is significantly high. And nobody knows what the future of it is, because ultimately the future is going to be a convergence of physical and digital.
So when you say, Mr. Biyani, that you would look to sell stake, I mean, you mentioned this in the newspaper interview as well. Would you do this because you need a strategic partner, or would you do it because you need funds, or would you do it because both are important, but one may be more important than the other? Can you explain the rationale for you going out and selling 10% stake in your business, which is thriving and which is looking like moving up big time, as you said in your outline in your strategy 3.0? Why would you be looking to sell 10% stake to a global retail giant?
I think I have been saying that if somebody has to participate in Future Group, it can't be more than 10% because of the laws and the restrictions and the other things. It can be a particular kind of investment because we are a listed entity. So I think I meant that, and that has been extrapolated to something like an investor coming in at 10%. So in case if anybody we align with or if we tie up with, it can't be more than 10% of involvement. That's what is our statement. And secondly, I think it's always good to make your balance sheet stronger in case there is an alliance which can get formed. I think alliances are the order of the day. The ecosystem which you build is the order of the day. How you build your ecosystem, how much moat you create, and how do you look at your own ecosystem flourishing is something which every retailer like us would like to work upon.
I'm sure, Mr. Biyani, but you would understand the Indian retail market's pulse better than almost anybody. Would you do this purely to get in strengthening of the balance sheet, or would you do this because a strategic partner, and if a strategic partner comes in, that the global practices, so on and so forth, or maybe an online presence, all of that might come into play as well? What would be the real nature of you wanting this 10% stake? Purely balance sheet reasons or something else?
I don't think so it will be beyond a balance sheet reason, because we have much more to offer, because we have created a whole supply chain from 35 to 40 factories on food side. We have a huge play on fashion side and an interesting play on the home side. We have a huge consumer base. We operate into 55 cities of India, 6,000 rural locations. I think we have been in existence for a while. We have made our mistakes. We know a little bit of India in a way. And I think we'll be offering more to a person than what the other person can offer us. Yes, I think the technologies in the world are changing, so one has to adapt to that. When we need alliances to see that our ecosystem becomes much bigger and broader. So that's where two places where we definitely need help. One is in technology and one is to broaden the ecosystem. Thirdly, I think it's all about money and making your balance sheet stronger, because any of our competitor would be having a much better and a stronger balance sheet than us.
Okay, last 2 or 3 questions, Mr. Biyani. Firstly, this whole advent of Walmart via Flipkart and Amazon also growing its footprint. Now, one is if the market size grows, then everybody grows along with. But surely the pace at which people are predicting online retail will expand would not be the size at which the market is expanding. They will be eating into the market share of somebody in order to do this. Would it be the local mom and pop stores? Would it be eating into the brick and mortar store model that is there in some way or the other? How would the scenario 5 years or 10 years out shape up?
I think, Neeraj, if you look at the entire landscape of India, I think the consumption growth is at least 2 to 3% more than the GDP growth. So let's take consumption growth is around 10%. And I think this 10% growth, some growth is coming out of e-commerce business. I believe e-commerce business is a very highly overemphasized, which has taken away our mind share and top of mind news in every which way. But if you look at businesses, 65% of business online is coming out of consumer durables, electronics and mobile phones, which are not a product which build loyalty. Fashion is to some part of the business, and grocery has been virtually non-existent in a way. So I think it's too early days. If you look at the non-food, the non-CDIT business, which is consumer durables, electronics and mobile phones, it would be a very small business. It won't be more than 40-50,000 crores. And I think if you look at the growth of retailers like Future Group, DMart and other, they are also growing more than 20-25% every year. So I think we are overemphasizing that e-commerce is making a dent. Except for a few categories, I don't think so they have made much of a difference in a country like India yet.
Well, that was Kishore Biani. Very interestingly mentioned that it's not possible for offline retail with the limited balance sheet strength that they have to keep on burning cash, which is effectively ruling out a full-scale attempt at going online the way Flipkart, Amazon and some of the others are trying to do. Interesting. Let's wait and watch. He was fairly hopeful of how his strategy 3.0 is turning out. The first launch has been fairly good, and they are bullish about what such strategies can do for their business going ahead as well. Okay, that's part one of the conversation. What's happening to the markets at large is important as well, Navneet. Quite a stark departure from what we've been used to the last few days. We were up and about and we're staying up.
Yeah, actually, we've been able to maintain the gains, so that's quite a positive thing to see. 10,750 was a resistance on Nifty, and as we speak, it's 10,771 on Nifty. Let's see if the gains can be extended from the current levels, and can we touch that mark of 10,800 in today's session. I want to pull up Procter & Gamble stock. The earnings came out actually a while back. I was just looking at it. The stock reacted negatively. Look at that sharp fall in P&G. It's down 3.5%. Looking at the earnings, it's not looking that great. The top line is declined on year-on-year as well as sequentially. Even if you look at the bottom line, the net profit for the quarter has come in at 89 versus 99 that was seen in the corresponding quarter. Even in the December quarter, they managed to put up a good show with a profit figure of 129. I think the reasons for the same would be higher ad expenses and also other expenses which are featuring in the numbers this time around. But clearly, market giving a thumbs down to numbers of P&G at a time when we are seeing good reaction for companies like Nestle, which has come out with good set of numbers, Asian Paints, which remains your top gainer on Nifty.
Well, let's wait and watch what happens. For now, though, just moments from now, before we get in our market guests on board to try and talk about which way the markets could be going. This is the last day of trade this week, and we are starting off, or we are looking like we will end on a fairly decent note. Just before I get in the guest though, and Navneet I know has highlighted a bunch of names, just a few stocks that I want to point out. Navneet, I don't know if you looked at, if you marked Sasken already or no, but if you haven't, just wanted to mark Sasken Technologies at 11% higher and a bit of a bump up in the last few minutes of trade as well. That stock is really revving up on the charts, 1,045. These are fresh life highs for Sasken. There is strength, of course, as Navneet has already highlighted, in Nestle, which is trading at fresh life highs too. But Sasken is not alone. Giving it company are stocks like Cyient, but to an extent emphasis, though I must say emphasis has on a daily basis disappointed, because what I mean is in today's session disappointed because it started off, went up almost 7 or 8% higher, but then just came off quite rapidly. It's not been the best of trading days for emphasis. Okay, let's get in our technical experts on board and try and figure out what to do in a scenario like this. It's not just Bharti Airtel, by the way, as we said. Sun Pharma is amongst the other names, which is reeling under a little bit of pressure. But let's start off by quick chart checks on the markets as well. Aditya Agarwala, technical research analyst at Securities, joins us right now on the show. In a bit, we'll also be joined by Sarvendra Srivastava with his thoughts. But Aditya, good having you, and good afternoon. Thanks so much for joining in.
Good afternoon. Thank you. Pleasure's here.
What about the markets? The last few days have been a bit tentative. Today we have a 0.5% uptick. Does it give you the confidence enough to either initiate fresh longs or go home with longs intact?
Okay. If I keep the elections aside, if I just look at the charts, they're looking extremely bullish. So it's on the verge of a breakout from an ascending triangle pattern. So if I just reduce the time frame to hourly or 30-minute, index has been forming an ascending triangle pattern. So basically, ascending triangle pattern is where the highs are same. So if you take a look at the highs, recent highs, they've been in the range of 10,790 to about 10,780, and the lows have been gradually rising. So the double, like 3-4 days ago, the low was 10,650. So gradually, it's been making higher lows. So when higher lows are being made and the highs are the same, it's called an ascending triangle pattern. It's generally a bullish pattern. So the moment markets break out of the resistance, that is 10,800, if I can take that liberty, 10,800, if it breaks out, you can expect minimum 100-150 point up move from that breakout zone.
And that's the level you're suggesting to go ahead and make a fresh
yes
buy?
Yes. So I would be more comfortable going long above 10,800 because that's the resistance that market's been making for last few trading sessions. But yes, if I keep aside the elections this week, I would definitely be very comfortable in going longs.
Remember, Jatia also in the morning show highlighted that people who are holding their long position should ideally book profits. But if you want to create fresh longs, one should create above that mark of, in fact, if you get that closing above the mark of 10,790, so watch out for that one. But Nifty continues to trade around the day's high marker. Aditya, in terms of individual stocks, what are you recommending?
So I'm looking at Tata Steel. Metals have outperformed in trade today, so that's looking extremely good, bullish. Tata Steel is a buy for a target of 650, keeping a stop at 585. You can get a good up move in Tata Steel. The second stock I'm looking at is not part of the main index. It's a PI Industries. I would go long in PI as well for a target of 920, keeping a stop at 865.
Okay, very interesting. I want to talk about two losers as well while you're bullish on the markets. Bharti Airtel and Sun Pharma have dropped like heavy rocks today, and they've stayed low. They haven't. I don't think they've made an intraday attempt to of a serious pullback today. What happens here? What do the charts indicate?
So as you already pointed out, stocks have been continuously making lower lows throughout the day. So they're extremely bearish, and if not only Bharti Airtel, in fact I take a look at Idea also, it's been down 13%. So it's been the case for both. Not too bullish, volumes have been extremely high, especially in the second half. Stock has fallen on good volumes. So I would stay away from the stock still. Though 380 is one support for the stock, but I'm not too bullish in holding on to Bharti Airtel, or I would not even venture into looking at the stock at current levels.
Okay, stay on. Aditya, so much more to talk about. Let's get in Neeraj, Dewan, Director at Quantum Securities, joins us right now on the show. Neeraj, good afternoon. Many thanks for joining in. It's been a while that we've spoken to you at Bloomberg Quint, so pleasure having you. What's the sense, Neeraj? The last few days, the market breadth almost seemed to be telling us that the market is not ready to move up. Somehow, we've done something the converse, despite there being enough pockets which have gone down today, the likes of Pharma, the likes of Telecom. We're still up about 0.5%. Is this market in the mood to go up?
Yeah, good afternoon, Neeraj. Yeah, I think market mood basically in the short term will depend on what is happening on the political front, because you're going to get some results from the elections also coming in the coming week. So, but generally, if you see May, the kind of macro indicators we've got, whether it's the weakening of the rupee because of crude going up, and some results also have been disappointing. So, there's no real trigger for the market to really go up from these levels. So, short-term volatility will be there because of whatever happens politically.
Okay. Neeraj, over the last few years that we've interacted, you've looked at valuations of companies during the earnings season very, very closely. This earnings season, ex-banks has been okay, including banks, not quite up there. Does that still give you the confidence that we could scale new highs? I mean, Tuesday's event notwithstanding, let's say Tuesday is not turning out to be any disappointment for the markets. Would you believe we are poised to move higher, looking at the way the earnings season has shaped up?
Actually, you see that it's the continuation of what's been happening earlier. The corporate-facing banks are still not doing well, and the retail-focused banks, they continue to beat the estimates, and performance-wise they've been doing very well. But the only difference this time, what I see in the corporate-facing banks, you saw banks results from ICICI Bank coming and the market really cheering, and the stock going up even after a poor performance, because we're getting an indication that now everything is there in the price. Even on the corporate PSU banks which are coming out with the results now, like Indian Bank came out with the result yesterday and the results were disappointing. But then there is one, you feel that one positive which is there in the result is that, after the February 12th circular where they were asked to, recognize all form of stress in this 31st March. So, we feel that now at least the stress which is there is all visible. Incrementally, the kind of provision that they've taken this quarter, the provisions will become half of this going ahead. So, once everything is there in the price, then, you normally make a bottom as far as stocks are concerned. So, going ahead, the corporate-facing banks can really contribute in the rally. So, that is one space where, even those results are not good, but the, future looks better from these levels.
Okay, that's the view coming in on the banking space, and that's what most of the market participants have been stating, that looks like now majority of the negative seems to be priced in the earnings that we've seen so far from the banks who've declared their numbers. But let's also bring in Sarvendra Srivastava, independent market expert, who joins us on the show now. Hi Sarvendra, good afternoon. Good to have you on the show once again. What's the call on Nifty? Are you still maintaining your negative stance?
Yeah, very good afternoon, and always a pleasure to be here. I think now we are heading into this big event next week. So I would say, yes, the overall stance still remains that 10,750 thereabouts, give or take 40, 50 points here and there, I think. So that leaves us with the pressure area itself, and with Nifty doing what it has done, I think still the mid-cap and the banking space, the pullbacks are still within reasonable limits, which is 50 to 60% of the decline. If you arrest the pullback, then typically it's a completion of the pullback move, and then the next leg down unfolds. So I would still be in that camp that till the risk that a pullback is not happening and it's already a new rally which is happening, which is not the case, is what I feel right now. So I am saying that this whole move is a pullback. So till that risk that this is a pullback, I think the stance would remain that we are looking at levels lower from wherever we are right now, and going forward for a trading view, I would think that 10,400 on the Nifty is where I would see the market going, and that is where we had recommended a futures trade last week as well. But for this week, I would not recommend a futures trade. I would say being an event week, it's better to participate with a 10,700 put, which is around 100 odd rupees. You will get it. So buy a 10,700 put, and with a stop loss of 44.40 for a target of around 300 points on that put premium, and participate into a down leg if it comes next week. So next week is critical for the market as a whole.
Okay, so Sarvendra is suggesting to buy the 10,700 put, target of 300 there. Sarvendra, in terms of individual stocks, what are the trades that you're recommending?
See, I'm looking now at a contra buy on Bank of Baroda. On the PSU space, I think probably the damage in some names probably now getting arrested, and this is one stock that over the last 3 months has been making higher bottoms. So the range is compressing. The lows have also been tightening, but the highs have also been tightening. But by and large, you started to make higher bottoms. So my sense is that there could be a chance here that you get a trading pop, if not more. So I would say that I would trade Bank of Baroda on the long side. This is my sole long for the day. Take a long trade for a target of around 150 on spot, and keep a stop loss at 137.40 for Bob. And remaining 2 trades are on the sell side. First one being from the crude theme, where we believe that Brent would be closer to 80 and WTI would be closer to 75. So in that sense, I think Apollo Tyres, which has not corrected till now, I think that could get a negative brush. I would say that I would short Apollo Tyres on the spot prices for a target around 260, keeping a stop loss at 283.60. So anybody doing a futures will have to just adjust corresponding difference into the futures. And one name from the banking space, which is DCB. I think Bank Nifty also struggling at around that 60, 62%, 66% mark on the retracement to this pullback. My sense is that whatever banks which run up faster than the Bank Nifty, DCB being one of them, now slowly getting distributed over the last 15-20 days. Now today's bar probably wanting to break that range lower. So a sell on DCB Bank for a target of around 180 is what I would recommend. And I would keep a stop loss there at 196.10 on spot.
Okay, sell on DCB, and that stock is at day's low. Sarvendra has a target of 180. Currently, the stock's trading around the mark of 189.5. Okay, Neeraj, coming back to you, you said there were some earnings for the March quarter which disappointed this street. One theme which is standing out is the consumption pack. We had numbers from Asian Paints, Nestle. Dabur's volume growth was also not so bad for the quarter. We've got HUL, which will be coming out with its numbers this Monday. Do you think for 2018 going ahead, keeping in mind that the rural recovery is in sight now, which everyone's been talking about, this could be the best space for 2018?
Yeah, I would say that this would be the best space as far as defensive is concerned. If you are really concerned about the volatility in the market and the possibility of correction which may happen if something goes wrong politically, I think this space is the one which you can, you can have a part of the portfolio, and this will be as a defensive space for you. See, why I'll say defensive is that because we've, I think most of us been very positive on the consumption space right from the GST introduction month, like from July, August, we've been talking about, GST also helping the consumption space, and and we're talking about this pay revision, the rural. So we've been talking about the last 2 monsoons were good. So all this we have been talking about for the last 7, 8, 9 months now, and we've seen a lot of these stocks also doing very well in this interim period of last 9, 8 months. So it is not that the stocks are very reasonably priced. I think most of them are trading at a premium valuation, and the upside just purely based on valuations will look limited because the multiples are really high right now. So I would say that the stocks, even in a correction, the market will not really correct because consumption is strong. We saw that in the volume growth in Asian Paints also. So that consumption-led growth will continue, but valuation is definitely concerned. So I will say that even upside should be limited, and there should be a phase where they'll consolidate for some time, and then when we start looking at FY20, maybe then again they will become reasonably priced, or you can again make a case for some upside in the prices. But for the timing, I think though consumption is good, but valuations are expensive.
Well, that goes without saying. The valuations for majority of these companies are at sky high, be it HUL, Asian Paints, even for Dabur. We've seen the multiples hovering somewhere about 40 times or northwards of that on FY20 earnings. But Neeraj, you bullish on a stock called Century Enka, where you are giving a price target of nearly 640 rupees. Could you talk to our viewers about what this company does and what's the rationale behind this buy call?
Yeah, basically this company is into nylon tire cord fabric, which contributes 60% of the top line, and this nylon tire cord fabric is used for bias tires. And then 40% of the business is nylon filament yarn, which is used for textiles. So it is used a lot for normal textiles plus active wear like dry fits. So the textile market is growing, the retail and the textile market is growing at 15% plus. And that is where they put in additional capacity, which has come from the last quarter. So they put 30% additional capacity for nylon filament yarn, because nylon tire cord fabric, which is for bias tires, will not really grow, because bias tires anyway slowly getting converted into radial tires. So they're putting additional capacity for something called a PTCF, which is a polyester tire cord fabric, which will cater to the radial car tire market. So they have a dominant position in the products that they are right now in. They have 25 to 30% market share, and they are among the 2-3 players which operate in India. The SRF is their nearest competitor as far as the nylon tire cord fabric is concerned. And because they put in additional capacity, so you will see growth coming in for nylon filament yarn and the polyester tie cord fabric. And because caprolactam prices, which is the basic raw material for them, has last year it went up and now it's stabilized. So you not really see too many shock coming from the raw material side for them. And on valuation front, this stock is very reasonably priced. It's available at 2.5-3 times EV/EBITDA, and with the current margin that they are at 13% plus, they'll be at 14% ROC by next year. So this stock can easily trade at EV/EBITDA of 5 to 6 times. So that is why we find value in this stock.
Okay.
Any concerns out here, Neeraj, for Century Enka? Anything that somebody who is investing needs to be aware of?
See, as far as the management is concerned, it's a Birla Group company, so that from that side we are pretty okay. But the only concern can be the raw material prices, because caprolactam is a volatile raw material, so they can be short-term concerns. The caprolactam prices really shoots up or really comes down sharply. If it comes down sharply, then there is an inventory loss which happens for a quarter. And if the prices really go up, so again they're not able to pass on the increase immediately. So there can be a couple of quarters lag before they pass on. So that was visible last year also. The first half, caprolactam prices kept on going up. So the first half was bad. When the third quarter, when they were able to pass on the prices, the margins really shot up. So in the short term, you may get the volatility in the earnings. But when you see a long-term trend of last 5 to 10 years, there is a good CAGR growth on bottom line and top line both. So short-term concern can be the raw material prices.
Okay, raw material prices can be a concern on the upside for Century Enka, and Neeraj has given it a target price of almost 640 rupees on this one. Just want to highlight few stocks before we move ahead. Godavari Power and Ispat is seeing gains of almost 11 to 12%. Remember, the 52-week high was seen was somewhere about towards the end of January, and it's inching very close to that mark once again. 500 currently on this counter. Remember, the earnings have come out already, and they've been posting good set of numbers for the last 3 to 4 quarters. Aditya, if I could come to you on the charts, do you see more upside for this one? If yes, what should be the target?
I'll just...
Godavari Power and Ispat.
Maybe Sarvendra wants to take that call while Aditya just figures out. Sarvendra, I don't know if you've looked at the charts of this one. It's a very active stock the last 6 months, Godavari Power and Ispat. Any thoughts here?
Neeraj, I'm sorry. I think that's not in a regular coverage stock, and looking at the code, I can't even find it on NSE right now. So I have live data for NSE. I think probably it's on BSE or something.
No, it's listed on NSE. The symbol is GPIL. GPIL, but that's
GPIL.
fine. I think we can just address a couple of more stocks. Sarvendra, the stocks which have been buzzing today are the likes of Nestle. We've also seen Asian Paints. Would you advocate creating any fresh longs on these stocks? Or I'm including Berger Paints too, which has gone up on account of the gain that we've seen for Asian Paints today.
I think Asian Paints had something pending on the upside. Probably it is completing that. So that has got a positive brush on the space overall, and Berger also started to move. But my sense again here is that looking at, as I was saying, looking at crude at 80, 85 for the Brent and 75, 80 for the WTI as final targets. I think if the panic for the paint space has not happened till now in the petrochemical space, I think it probably will happen now. Because that's very, very typical with crude, because even in 2007-8, when it was at 110, 120, people were not bothered. And from 120 to 140, everybody panicked. So I think last 15, 20% crude always makes everybody panic. And that panic probably as people are still not, that's still not started for whatever reason, I don't know. But I think prices above 80 would definitely set the cat among pigeons, and spaces like tires and paints would definitely get a negative impact of that. So I would not touch this space even though it's going up. I would not advise fresh buys here. In fact, when the turn comes, probably when those signals happen over the next week, if at all they stop moving and start turning, I think they would be some of the best shorts in the paint segment as well as some of tire names. So with crude, I think I would want to short these names at higher levels.
Okay. Just before we get to chart of the day, just one more chart. The stock has been active, I think, the last couple of days. Wellspun India up 6% today's session as well, 64. Maybe this week's chart would be informative out there. This is what it has done today. 6 million shares traded up 6%. The last 2 days, as I said, it's been active. The last couple of trading sessions has just shown a bit of a bounce. Any thoughts here on the charts? How does it look, Aditya?
Okay, so as you rightly pointed out, stock is up significantly in the last 2 trading sessions, and volumes have been healthy. So stock is up on good volume, so no denying about that. If it sustains above levels of 66, I'll be looking at a target of 72 and higher here. So more upside definitely.
So it needs to sustain above 66. Okay. On to the chart of the day. It's been a tough 2018 for the PSU banks. No surprise thereof. But what does Agam Vakil have to say for these? Agam, tell us.
So, Neeraj, as you said it, we've seen a decline of 23% for the Nifty PSU banking index, and it's clearly underperformed the Nifty bank index, which is in the green as the same for the Nifty. But what was really interesting was that when I ran a list of all the companies that had a substantial return potential according to the Bloomberg consensus, and I was just looking at the banks, 3 of the 5 banks belong to the public sector space, and the one which offers you the most return potential based on the Bloomberg consensus is Jammu and Kashmir Bank, projecting a 55% return from current market levels. And after that, of course, you have SBI. That's usually been the analyst favorite, but Punjab National Bank is the other one which also offers a 36% return from current market levels. So 3 of the 5 banks which offer the most return potential are government owned. The question really is, can we see these banks help the Nifty PSU bank index eventually outperform the Nifty banking index and the Nifty?
Thanks, Agam, for bringing all those details. That was the chart of the day. I just want to pull up the Nifty Pharma Index. We've been highlighting that for you. It's the top sectoral loser. Remember, yesterday in the last hour of trade, there was a sharp fall seen for Nifty Pharma. And once again, it's almost around the lows itself, down almost 1.3%. The biggest loser there is Sun Pharma. That's down 5%. And I think that's the major heavyweight constituent of this index, which is dragging it lower. Neeraj, if I could come to you on the pharma pack, where on one side there is outperformance seen from the IT pack. We've also seen rupee depreciation creating some bit of tailwind for IT pack. Do you think now from the current levels, because there has been substantial correction when it comes to valuations also of these pharma companies, does it make a good buy at these levels? If yes, if any stock under your coverage that you guys like?
Yeah, I think so, because I think we've seen last almost 1.5 years underperformance from pharma. See, most of these large stocks like Lupin, Sun Pharma, Dr. Reddy's, last 2 years have corrected, almost come to half of their prices. So, and they've all gone through the regulatory issue as far as US FDA is concerned. That is also bothering most of these stocks. But after seeing this kind of correction, I think one can make a case now. One should be buying into pharma stocks for the next 1 to 2 years, because I think downside would be limited and there's a good scope of making a decent return from these levels. So one stock which we like among the pharma is Cadila, which has also corrected, and we've seen that stock consolidate and then they come out with their product launches, and then we've seen it really outperforming every 2 to 3 years. So I think in the last 1.5 years when Cadila has corrected, consolidated, so that would be one topic from the pharma as far as our stocks are concerned.
Okay, just a few queries that have come in on social media. We'll try and take some of those. A lot of put option queries. Maybe we'll take them with Sarvendra post this break. Yeah, just viewers requesting us to stay tuned and have some patience. We'll come back from the break and talk about some of these names. Just one final question from my end, Neeraj, and something that I tend to ask you a number of times. Either the cement space or the auto component space, 2 pockets which have had chalk and cheese performance. Cement somehow has been through a slow grind in the last 1.5 odd months. Almost every worth its salt has come off. And on the other side, auto components have seen a big spurt. Minda Co-op, Jamna Auto, you name it. A clutch of names moving around quite swiftly. Anything within these two pockets, the mid-cap end of these names, that looks interesting from a business perspective?
Yeah, from auto ancillary space, one stock that we recently initiated coverage on is JTKT, which was earlier Sona Koyo Steering. So though we have stocks like Jamna Auto, Minda Industries under our coverage, but I think they have also, the stories also played there and they've given a good return. But going ahead, we feel that JTKT has good potential because this stock could not perform earlier because of the management, the Indian management by Mr. Kapoor was handling the company earlier, and now it has been taken over by the Japanese promoter. So the whole 77% holding that is there in the company of the promoters, 68% is by JTKT of Japan and rest 7% is by Maruti. So this company earlier had lost market share in the steering wheels, which the new management is now promising to address, and incrementally they are getting 60% of the business from Maruti, and plus they have got a lot of other clients like Toyota. Toyota is a new client for them, and they have clients across. So they had lost their market share from a 65% in India to as low as 45%. So gradually we feel that now with the new management coming into place, we feel the next couple of years we'll see market share going back, and there will be improvement in the costs because they even going to replace some debt with foreign debt. And there's some consolidation of businesses happening which JTKT has in India. So all that will result in improved performance for JTKT going ahead. So this would be our topic right now in the auto ancillary space.
Okay, by the way, Aditya Birla Fashion numbers and a very robust set of numbers out there. The stock is now up 8.5%. I don't know if this quarter can make it get out of this big slumber that it is in perennially for the last 1 year at least, if not more. It's been stuck in this range. It goes up to 160, 165, 170, and then tends to come back and hover around the 150 mark. I don't know if this quarter changes these things. Remember, the branded apparel business of Arvind, fairly robust. Aditya Birla Fashion, I don't know the breakup out here, but the overall reported numbers seem to be very strong. The margin performance looks to be very strong as well.
The bottom line is on the higher side, and that's substantially higher. I think there's a deferred tax, so there's a tax write back in fact of 69 crore which is provided that Philip.
But even then, versus estimates of 30 crores, you pull back some of the deferred tax.
Yeah, it is still on the higher side. I'm just saying 69 crore is the deferred tax, but overall the top line growth is 1,753 versus 1625 which was seen in the corresponding quarter, but sequentially I think it's slightly on the lower side, but year on year there's been a sharp improvement as you rightly mentioned.
9.3% underneath the margins versus 7.5%. So
operating performance is good.
It's very, very robust. Neeraj, before we thank you, any thoughts here on this, on this apparel, branded apparel fashion? There are 2 or 3 players now with some size to talk about. Aditya Birla Fashion being one of them.
Yeah, we are positive on this space. We even, looking at companies like Shoppers Stop, we have Future Lifestyle under our coverage. So there is definitely top line improvement, and a lot of these companies are even improving the margins by selling some of the businesses which are not doing well. So I feel that this space is one space where you'll still see that 15% plus growth happening, and there is upside potential even in stocks like Future Lifestyle for that matter.
Okay, good going for Aditya Birla Fashion. Some cost control measures clearly visible on the operating front. The rent expenses are lower both sequentially as well as on year-on-year basis. Other expenses too appear to be on the lower side, and the stock has reacted quite sharply to that. But on the flip side, Rain Industries is at day's low, where sequentially there has been some bit of blip when it came to the bottom line figures. Now down almost 17%. Remember, this is one of the outperformers of last 1 year, giving good returns to its shareholders. Neeraj, before I let you go, any thoughts on Rain Industries?
Rain Industries, you said?
Yes.
Yeah, no, we don't have a coverage on Rain Industries, so I really can't give a view on that.
No problem, Neeraj. I think we'll let you go on that note. Thanks a lot for joining us today and taking us through your views on the markets and also sharing your fundamental pick, and that was on Century Enka. Let's just get some technical view going on Rain Industries. If you can open it on your charts, Aditya, how is it looking? Because this is one of the outperformer. Do you see more downside from the current levels?
Yes, it looks like stock will slide further, and I'm looking at somewhere in the zone of 240 to about 235. So further downside, yes, possible.
Well, let's wait and watch. Okay, we should take that break. I just want to mark two things before we take that break. Aditya Birla Fashion is down again to 151. So somehow this stock just doesn't do. Let's wait. It's too early to call. And, I know we've got a few call option queries. We'll try and take with Sarvendra if he tracks some of the nifty lots on the other side of this break. Stay tuned though. We'll come back from the break in moments from now and try and talk about some of these stocks as well.